Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical monthly support and demand area. From here, in fact, multiple rejections to the upside have been created. Every single time that the market tested this zone, it got rejected to the upside quite aggressively. And as the market is testing again this exact same level and rejecting it to the upside, we could expect to see more bullish price action to be created away from this level. So the monthly time frame does seem quite bullish. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, the situation is quite clear. We have a market which has been creating a series of weekly higher highs and higher lows. Every single time that the market created a new impulse and correction, it then followed with the creation of a new impulse to the upside, therefore continuing the creation of this uptrend with already 3 higher highs. And now we have the possibility to create a fourth higher low and create yet another impulse to the upside. We can also notice that from a pattern standpoint, as we have this impulse to the upside followed by a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of this impulse leg. And this shows us how we have at 0.618 and 0.786 Fibonacci retracements currently lining up exactly at this area. Now, what this creates is confluence of support at this zone because we have multiple Fibonacci levels and horizontal structural support lining up in the same area of price, which again creates confluence of support, which increases the probabilities of a potential rejection to the upside away from this zone. Now, if we drop down on the daily time frame, what do we have? Well, from a daily perspective, the situation is quite clear. At the moment, we have the previous high, which is exactly this level. From here, this previous push to the downside was created. Until the market will remain below this level, it can easily be rejected to the downside because essentially we have a bearish market from a daily standpoint. So even though the monthly and weekly seem bullish, the daily time frame still has bearish structure. So let's keep this in mind and let's go and see what we have when it comes to the commitment of traders. So what the big players, so hedge funds and the non-commercials in the market are doing and how they're shifting their orders for the GBP. Now, the first thing to keep in mind, as usual, is that if we're looking at the data for the GBP, we're actually already looking at GBPUSD. So if we go and see here what we have when it comes to the net positions, we can see that on the GBPUSD, and the reason for which we are already looking at GBPUSD is because all currencies on the spot are traded against the USD. We can see here the net positions on GBPUSD went from minus 28.9k all the way up to plus 74k. So essentially, institutions went from having a negative net positioning, meaning that they went from having more shorts than longs with 72.6k shorts and 43.6k longs, all the way up to having the complete opposite, so more longs than shorts with 126k longs and only 51k shorts. And this increased the net positioning at the current level of 74.3k. So in the long run, institutions clearly have moved to the bullish side for GBPUSD, therefore anticipating a potential rejection to the upside away from the historical support that we have identified on the monthly at the beginning of the video. However, with just the last few reports, we can see a clear decrease of the net positions. So it seems like in the long run, institutions are long-term bullish on the GBPUSD, but short-term bearish on the GBPUSD, which is currently reflecting quite nicely in the overall technicals that we have just seen, because on the monthly, we have seen that everything is quite bullish with the market. If you remember at the beginning of the video, we mentioned how the market was testing this historical support and demand. So in the long run, everything looks quite bullish, but in the short term, so here on the daily time frame, as we have just seen, the market is still in a bearish trend. So when would all the directional timeframes align to the bullish side? Well, that would only happen if we get a potential break above this resistance. So until the market will remain below this resistance, it can easily continue lower, but a break above would make this market shift back to a bullish market, also from a daily perspective. Now, by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. So as I was saying, from a daily perspective, until the market will remain below this level, it can easily continue lower, but a potential break above would make this previous resistance become support. So after the break, on the retest of the previous resistance turn support, that is where there is good probability to see a potential reversal to the upside, potentially completing this daily impulse correction and impulse pattern to the upside. So if the market creates this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.